Welcome. In this video, ZBCN coin price has formed a bullish pattern. We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. A close look at the chart shows that the price has been moving in a downtrend for a certain period of time. That is a classic downtrend pattern. The main feature of this pattern is that the price makes lower highs and lower lows on each attempt. However, there is one important and positive detail to note here. This downtrend seems to be coming to an end, and the price is trading very close to breaking this descending structure. This is generating strong technical signals that a much stronger bullish move could begin in the coming period. Downtrends are periods when investors get psychologically tired and their patience is tested, especially during long periods of consolidation. However, the breakouts that follow these periods often herald a new bullish cycle in the markets. The structure of the current downtrend is reminiscent of this scenario, because although the price has been under the pressure of this trend, it seems to have come to the end of this pressure. In particular, the fact that the price has repeatedly touched and then reacted to the falling trend line suggests that this area is now starting to weaken and a breakout is imminent. In technical analysis, an upside breakout of a falling trend is usually considered a trend reversal. This means that if the price manages to break out of the trend, where it has been suppressed for some time, a positive mood prevails in the market, which whets the appetite of buyers. When the downtrend is broken, traders take this as a signal and start buying positions. This not only pushes the price above the trend line, but also leads to a significant increase in volume. Such volume-backed breakouts lay the foundation for much healthier and lasting uptrends. This falling structure on the chart also shows that the price is compressing and gathering its energy. When the price gets stuck in a certain band and moves in a falling structure, it sets the stage for a strong upward momentum and an explosion over time. Such squeezes often lead to sudden and sharp movements in the direction of the breakout. The current position is quite suitable for this scenario. If the price breaks the trend, it has the potential to technically reach much higher levels. Especially when the price is testing the lows in this downtrend, the fact that it is now experiencing a lesser decline and starting to hold in these areas signals that buyers are slowly entering the market. This is often the case before a trend breakout and is considered a positive signal. This is because the predominance of buyers pushes the price towards the trend line, which will be broken when there is enough buying power. This is the beginning of a new bullish period. In addition, this falling trend line also works as an important resistance zone. If the price manages to break this zone to the upside, this level will now act as support. In other words, this line, which has pushed the price down in the past, will work as a support in case the price pulls back after the breakout, and will help the price to hold on to this line. This contributes to the formation of a very healthy bullish structure in technical terms. When all these technical factors are evaluated, it is clear that the current downtrend may have come to an end, and the price is preparing to get rid of this pressure. If the price manages to break this trend line on volume, a strong upside rally could begin. This rally is a very likely and positive scenario, given both the congruence of technical indicators and the price movements experienced in similar structures in the past. But we cannot decide on the analysis with trends alone. Let's look at other metrics. Keep watching. The pattern, which is one of the most important technical structures on the chart, is a classic pennant pattern and is known to give very positive results in the world of technical analysis. When we look at the current price action, we can see a strong upward bullish move followed by a short-lived sideways squeeze. This structure is often referred to as a pennant pattern and gives very strong technical clues that the trend will continue. Such pennants usually occur after a strong and steep bullish move. After this sudden and sharp rise, the price needs to catch its breath and enter a period of consolidation. However, this is a very healthy development for traders because the market is gathering strength for the next upward move. This is where pennant patterns come into play. The structure seen on the chart right now is exactly in line with this description. That is, after a rising move in the form of a flagpole, a short and tight correctional structure has formed, which has taken on the appearance of a pennant. Pennant patterns are considered one of the strongest signals in technical analysis that the trend will continue, especially when the price starts to approach the upper trend line of this pennant structure. We can understand that it's time for buyers to act, because when this line is broken, the previous strong uptrend is expected to resume where it left off. This, in turn, leads to a strengthening of positive expectations for investors. In the current situation, the price is very close to the upper band of the pennant pattern, and a breakout here could spark a serious accelerated uptrend. One of the most striking features of this type of structure is that the target level is quite clearly identifiable. According to the rules of technical analysis, the expected target level after the breakout of a pennant pattern is usually as high as the pole length. This means that if the price manages to break out of this congested structure and break the upper boundary of the pennant to the upside, the upward movement can continue quite aggressively, and the target zone can be reached in a short time. This would boost investors' confidence, and the positive sentiment in the market would increase even more. In the case of an upside breakout of the pennant pattern, the market psychology also changes dramatically. This is because such patterns are usually formed when bulls take control and bears start to retreat from the market. When the breakout occurs, many traders take it as a buy signal and start increasing their positions. This is one of the biggest factors that pushes the price even higher. The volume factor is especially important here. In pennant patterns, there is usually a significant increase in volume at the time of the breakout. This increase in volume indicates that the breakout is not fake and that real buyer interest is present in the market. A bullish breakout is an extremely positive signal for both short-term traders and long-term analysts. This is because it signals the start of a serious change of direction or a strong trend continuation. Returning to this pennant pattern on the chart, the target of the pattern has a serious upside potential if the price breaks out of this congested structure to the upside. Achieving this target is a highly probable outcome as it is one of the scenarios that traders rely on the most in technical analysis. Thanks to this structure, the price could test much higher levels and continue its journey towards new highs. Looking at the overall structure of the chart, one of the elements that is particularly noteworthy is the development of the RSI indicator. The RSI is a highly reliable momentum indicator that is often used by traders and technical analysts and plays an important role in identifying the balance of forces in the market, overbought or oversold areas. In the current situation, the structure observed in the RSI points to an extremely critical level. This is because the indicator has had a downward sloping trend line for a long time, and this falling trend line has repeatedly provided resistance and suppressed price action during the RSI's previous bullish attempts. At this point, however, it appears that the RSI has touched this falling trend line again and is preparing to break it, or is about to break it. This is a very positive and promising development in terms of technical analysis. This is because such downtrend breaks in the RSI usually signal that the price will break in a similar direction and a new bullish move may begin. This level is especially important if there has been a reversal every time the RSI has approached this line in the past. Now this trend line is being forced upwards, indicating that buyers are starting to gain momentum and the potential for the market to change direction. Such trend breakouts on the RSI are technical signals that traders often overlook but are actually quite critical. Yes friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.